We have about 30 minutes left in trading today. You're watching this video after the close. The NASDAQ is down 2.5%. The S&P is down 1.2%. But guess what? The Dow is having another up day, up 0.6%. This is the heat map on the S&P. Guys, look at this. Technology, semiconductors, consumer electronics, software, all communication services. Look at all this red. Banking is killing it today. But look at this, guys. NVIDIA down 6.4%. Microsoft down 1.4%. Apple down 2.5%. Taiwan Semiconductor down 8.5%. Broadcom down 7.5%. AMD down 10%. Intel up 1%. But guys, at one point today, it was up like 3 or 4%, I think. So this is incredible, especially with the Dow 30 being up today and the NASDAQ being down so big. This is a big drop for the NASDAQ. Guys, this is our Everything Money 24/7 channel. We do these 4 or 5 videos a week reacting to the market. If you like this kind of reaction to the market, to news that's going on, to earnings releases, subscribe to the channel. We love making these videos. It's a great place to be. Guys, a lot of green over here, though. Also, consumer defense. Makes sense. People are leaving the tech stuff, going to consumer. Healthcare, apart from Eli Lilly, everything else is basically green. Medical devices, basically every majority green. Man, energy, majority green. Oil and gas. I mean, this is incredible. What a big difference. Tesla's down 4%. This is incredible. And the reason being is, as we talked about before, as the Magnificent Seven and the large cap stocks really gained, it was really driving up the majority of the value for the S&P. But that's what happens then. When things flip, what's going to happen then? It's these big ones that are going to drive a lot of the losses because these are market cap based indexes, the S&P 500, the NASDAQ. So as people get out of them, as the prices fall, the big ones are going to fall the most. We've talked about small cap versus large cap. Small cap's having a huge run right now. And on our main channel, we're going to have a video out later this week about small cap and the Russell 2000. That is what's incredible about these things. What's key is to be calm. If markets fall, which they eventually will, we'll be there to help you handle the emotions because the emotions are the hard part. All the more reason to subscribe to this channel. We look at red days as wonderful opportunities. I own 18 companies. I could not care less. In fact, I want the stocks to fall so I can buy more of them. I bought a stock last year and a half, 2 years. It's up 130%. And I'm literally upset about it because I didn't get my full position in yet. I'm sitting there going, listen, I want to buy more of it. I can't buy more of it when it's up 130% because the fundamentals didn't go up 130%. The stock price outgrew the fundamentals. I'm happier when stocks are lower, the stocks that I love. Because the big key here is what you need to be able to do is if the stock falls, but the fundamentals are the same or getting better, what are you supposed to do? You're supposed to buy more. But what ends up happening is most people sell. Why? Because news follows the stock price. Just think about it right now. This is our first big down day in a while. Think about it this way. How's the news been on these companies for the last few months? It's been incredible. These companies can't miss. What you're going to find is the fundamentals of these companies are probably going to get better or not drop as much as they should, as the stocks will fall. But eventually, the news will follow the stock price. And as the stock falls, the news will start to become more and more negative news. But your job as an investor, and the reason you're watching this video is you want to learn what to buy and when to buy it. You want to buy stocks that make sense at good prices as they fall. Is that easy to do? Absolutely not. Is it tough for everyone? Absolutely. It takes a lot of training yourself to be that way, but that's why we're here. That's why we do this. That's why we have our community, because the people in our community love red days. People in the community right now are talking about, oh my God, look at these things. Now, NVIDIA's still up a ton. NVIDIA's still at a pre-split price of $11.80. Did it go much higher than this? Absolutely. NVIDIA is at $118 a share. It's all-time high. Just June 20th of $148 a share. This stock is down how much in the last month or so? It's at 9.3% in the last month, 12% in the last week. But look at this. In the last 3 weeks, 41%. 6 months, 112%. Year to date, 147%. In the last year, 155%. Guys, now, I've talked about NVIDIA. It's a phenomenal company. Great balance sheet. The question is, can today's price justify that future stream of cash flow that company is going to make? I argue that's going to be difficult. We don't know the future. The future is going to be something we have no idea what's going to happen. But what has to happen to justify that? That's the key. Is it probable or is it just possible? I don't want you investing on the low possibility ideas. I want you to invest when price and value disconnect and when other people underestimate a company. That's what the best time to buy is. When other people underestimate an ETF. When the economy has a recession and people are scared, that's when the time to buy is. Not just because of short term, oh my gosh, stocks are scary. We want everyone being scared. And that's hard to find. And this could be the start of something going down, or it could just be a minor setback until stocks continue their run up. I have no idea. Nobody has a clue. Stop listening to people about that. Stop worrying about what's happening, who's going to be president, who's doing this. At the end of the day, there's so many data points. What matters most is this. If you buy a company or you buy an ETF at a good price and fundamentals get better, your stock will probably go along with it over long periods of time. That's the hard part. It's no coincidence that Fidelity, we had a study back in 2014, I believe it was, where they went and looked at the best performing accounts on their system. You know what accounts they were? The accounts that nobody touched because they forgot their logins. The accounts where people died and weren't able to touch their money. Those are the ones that did the best. Why? Because they just sat back, found good investments, and just sat back and waited. That's it. Because when news is bad, people get scared. When news is good, people overpay. I want to change that for you. If you're already the kind of person that has that mentality, you got to be involved with us. You got to be here watching our channel because that's only going to enhance you and make you better. It's about that repetition over and over for that psychology of it. Guys, the volatility index, the VIX, it is up 10.6% today. Wow. This is called the fear index. It's currently at around 14.5. The historical average is about 19 to 20. And we've been low for a long time. This says that people don't have a lot of fear. It was recently at like 12, high 11s and 12. That's pretty much saying we have no fear. Guys, spoiler alert, when there's not a lot of fear, that's when things are a little too frothy. That's what I want you to remember. As John Hussman says, we don't know, in a room filled with gasoline and a fireplace in the corner, we don't know which spark will cause the explosion. But we do know there'll be a spark that causes the explosion. We have no idea. Look at the events of this weekend with the assassination attempt on President Trump. If, God forbid, something bad had happened, would markets have done something different this week? Maybe so. And could that sparked a big bear market? Maybe so. Does that mean his assassination attempt or something else would have been? No, it's just that's the spark that caused the explosion. As I always give the example for marriage. When the husband finally does something that's just, he drinks milk out of the carton and puts it back in the fridge. And she says, I'm done, I'm getting divorced. Did that cause the divorce? No, it was the buildup all along the way. In stocks, it's the overvaluation. People don't care about valuation until they finally do. And when they do, they care about it with a vengeance. We have not cared about valuation in a long time. We're at all-time highs of valuation. On Monday, I did a video. We're at 113% overvalued. That's the highest I have on record going back to 1930. Highest I've had on record going back to 1930. How does the future hold up? Well, guys, it's very simple. The more you pay for something, the less your return is going to be. The less you pay for it, the better your return is going to be. And there'll be a time when people are criticizing NVIDIA. Look at Tesla. Tesla's been criticized a lot in the last 3 years because its stock was $414 a little under 3 years ago. And even after the recent run-up, it's still nowhere close to that. But people have changed their view on Elon. You might sit there and say, oh, it's because of his buying of Twitter. No, I think the criticisms point to Twitter, point to his political views, but the reality is the stock started to decline because of overvaluation and overexhaustion, and then they blame those other things. That's what I want you to get the mentality of. Your job is to sit there, get rid of the noise, buy good companies at good prices. If this makes sense to you, subscribe to the channel, and I'll see you in the next video.